Hello, ladies and gentlemen. Good day to you. Anywhere you're listening, I am Yemi Olaleye. I'm a market analyst for FX Pro, and I welcome you to another weekly edition of our weekly outlook. We look at the market every single week to look at the opportunities that exist therein. And week in, week out, we've been taking some bucks out of the market. And this week is not an exclusion. So we're going to delve into the opportunities we have for this week, which covers for the March 31st till April 4th, 2025. So let's go straight to the fundamental outlook directly on the Forex Factory, following the calendar, and we focus on the high impact news only. And on Monday 31st, all day we have Euro news coming up for the German prelim CPI monthly by monthly, and this is also expected to impact on Euro pairs for that day. So we're going to take it easy and take caution trading Euro on Monday 31st of March 2025. And then on Tuesday, April 1st, we have Australian dollar coming up 4:30 a.m. Nigerian time, which is the cash rate and Reserve Bank of Australia rate statement. 3 p.m. Nigerian time, US dollar news is coming on ISM manufacturing PMI, and this is also expected to drive US dollar pair in the market. On Wednesday, April 2nd, 1:15 p.m. Nigerian time, we're expecting the US dollar to come up with the ADP non-farm employment change, and this is also expected to move USD in the market. So ideally, we have a series of 2 days consecutively where US dollar is going to be impacted, so we need to trade cautiously more in this week. And on Thursday, 7:30 a.m. Nigerian time, CHF is coming up. 1:30 p.m. Nigerian time, US dollar is coming up. At the same time, coming up again, 3 p.m. Nigerian time for unemployment claims and ISM services PMI. The last trading day of the week, which is the Friday, 4th of April, 1:30 p.m. Nigerian time, Canadian dollar is coming up. At the same time, we have US dollar coming up for employment change, unemployment rate, average hour earnings, non-farm employment change, and unemployment rate. All of these are coming up together at 1:30 p.m. Nigerian time. Then US dollar is coming up again by the Federal Chair Powell when he speaks by 4:25 p.m. Nigerian time. And this is an exciting news to let you know that we have a lot of volatility in the market on this said date. So we have to be careful on how we trade these currency pairs that has to do with US dollar and Canadian dollar. All right, without wasting time, let's go straight into the business of the day where we have the technical outlook, and let's see how those will impact the market for the week. Starting with the DXY, which is the dollar index. On the monthly time frame, we're going to analyze this to a lower time frame like the 4-hour time frame. So in the next couple of minutes, I'm going to walk through some of these currency pairs and we'll talk about gold and we move on from there. Without wasting time on the DXY, what do we see right here is that we see the DXY to still be covering up for a bearish momentum right there. Ideally, we had a massive bearish momentum on DXY for this month of March, and we expect this to continue in this direction. So whether this is going to buy a little bit more in the last trading days of the month, which we have 2 trading days before the sell will continue, or it will keep selling just like that. So let's check this on the lower time frame. So I'm going to take this out. On the weekly time frame, therefore, what do we have? We had an opportunity to see how the market has bounced into the weekly liquidity zone, which is the fair value gap. Before that's the anticipation, by the way. That is the anticipation. So before now, we've seen how the market has actually traded and ranged all through the last 3 weeks on DXY. However, in all of this range, we've seen how the market has created a little bit of bullish momentum in the market, but then the bullish momentum is not significant per se. It's not really much because the market still traded and rejected that zone. So ideally, we should be expecting this level of the market to be taken, right? And the market has actually tapped into that fair value gap for the week and it's closed just below it. So if we go by that analogy, therefore, when we look at this carefully, we're going to see that we have a closing of this particular week, which was the previous week trading. Then the last week trading actually broke above it but closed below it. This is also still giving us a bearish momentum right here. This is also giving us a bearish signal right here. So I'll be expecting this to continue to get into this price range. Okay, this will be my analysis on the DXY weekly time frame. Ideally, let's go into a more comprehensive outlook on the lower time frame to further see what we're expecting on the DXY. Let's go to the daily time frame. And let's see what's happening there. So on the daily time frame, look at this. You will see that this cycle is not completed yet. If you can look at this from the perspective of the technical outlook, you see the market has created this, and that all over the time. But then it seems the market is not done yet because we still have some level to be filled, liquidity being grabbed in the market. So what do you see right here is that the market will likely still do more of bearish momentum into this price level. So which means all this price range from here to here is where I will be expecting the market to still come to in the future. So basically, this is just what I'll be expecting in this market. So let's check that basically on the lower time frame and see the analysis we have there. Let's see on the 4-hour time frame and let's see what we're expecting. So I'm still expecting more bearish momentum right here on the daily. All right, and more so, I'll be looking at a Monday. When the money comes and the market forms, it will give us more bullish momentum to go a little bit of buying and then selling into where we have most of the liquidity. So basically, I'm expecting the candlestick for Monday to form and then take more action. But for now, we can go to the lower time frame, which is the 4-hour time frame, and see what we have. I think that should explain what I was expecting on the daily time frame even more. So this is the 4-hour time frame right here. When you look at this, we've had this bullish momentum right here, choppy over time. And then all of a sudden we have a perfect structure here. This is a very good structure. Look at this break of structure to the high side. Then we had a low, then we have a failure swing, then break of low to the other side, changing character, so to say. So when you have a change of character like this, at this price level to this price level, is known as a fair value gap. And with this rejection of the candle we had here, with the rejection we had here, with the rejection of this third candlestick, what are we expecting from this market? I would be expecting this to do a bit of buy into this range where we have liquidity. Then I can look forward to how the market will come straight into this range for this week. So ideally, I'm going to take out everything. Don't worry. I'm going to take out every single thing I drew there. So this is just what I'm expecting from this market. I will be expecting a bit of this buy into this range. Then I'll be expecting the sell to continue to a price level like this. Why? I'm expecting the market to get into a fair value gap zone right here. So basically, this is what I'll be expecting from this market. And where would that be? You can see the price level there. I'm coming. You can see the price level. Okay, you can see the price level. This is where I'll be expecting that to happen. So basically, this is what I have for you on the DXY 4-hour time frame. So let's go to the EURUSD. Let's go to the monthly time frame. Let's see what we have. The month of March was a massive bullish momentum for Euro US dollar. Although I was expecting this level to be taken out in the market, but seems this month is not going to do that because we have just 2 trading days for this month to be over, and then I'm not expecting all of this to be to happen in this 2 days. This is about 400 pips on average. So I'll be expecting more bullish momentum for this in the next month, which is the coming month of April. But then what do we have here? We have a series of rejection in the previous days, which is normal towards the end of the month to experience something like that. And then let's go to the lower time frame and see what we have on the weekly outlook. On the weekly outlook, we had a massive momentum right here about us 3-4 weeks ago, with the market did about 515 pips on average. Then the following week, we had a little bit of tussle in the market, and the week that followed, we also had that bit of tussle between the bulls and the bears in the market. So we're not having a real or much of bullish momentum or bearish momentum. But this last week we had, the candlestick was significantly of very, very low volume and momentum. As a matter of fact, it was more of a chopping candlestick. So on the weekly time frame, we have a candlestick that looks just like a doji candlestick, and ideally from this price level to this price level was a zone we were expecting to see the price to tap into, because this was a weekly fair value gap zone. So last week, previous week even tapped into it, but this last week tapped into it, and it tapped into it about 80 pips, and it traded above it, closed above it. So which means this is giving us a more significant bullish momentum for this price level, which is expected to do about 400 pips to where we anticipate the market to still get to in the future. So what am I saying in essence? I would be waiting for more bullish momentum for this week on Euro US dollar. So going to the daily time frame, let's see the opportunities we have there. Is there a certainty for us to buy at the market opening, or is there a certainty for us to just sell at the market opening? Ideally, it remains the same. Just like you see this is a daily imbalance in the market, and we had another one right here. This is another daily imbalance in the market. So basically the market has tapped into the first one, and I'm not expecting the market to tap into this because it's too massive. And you can see the liquidity pool you had, the market has moved so much well that we know certainly that the market is creating momentum to the upside. And of course, the last 2 trading days of last week, which was the Thursday and the Friday, created bullish candlesticks which closed above the previous day. And ideally, when we see something like this, it just gives us an idea that we should be expecting more bullish momentum for that week. So in that week, I'll be expecting nothing less than about 430 pips or 140 pips bullish momentum on that week, so to say, on EURUSD, which is very, very possible. And of course, at the end of the day, this is actually our target, about 400 pips on average. So basically, I'm expecting more bullish momentum in the market for next week on EURUSD. Now let's go straight to the 4-hour time frame. Let's see what we have there. Is this 4-hour time frame creating opportunity for us to see a bullish momentum? Yes, of course it did. Look at what it's showing on the 4-hour time frame here. The last candlestick we had for the trading session on the last week Friday was a doji candlestick, and this doji formed just below the previous week, which was a massive bullish candle. Now when we want to check this properly in the market, you see everything the market created here actually is a trendline liquidity, meaning there is so much opportunity to make money above all of these price zone. So what I'll be doing is to expect the market to do a bit of buy, and followed by retracement, then another bit of buy, followed by retracement, another bit of buy, followed by retracement, and gradually we get to where we are going. So basically, this is what I'll be expecting in the market for this week. I'm expecting a bit of retracement, because this is a fair value gap zone right here. If you're looking at it, this is a bit of fair value gap zone on 4-hour time frame. So all these boxes you see here, I drew them just to show you that liquidity is residing in these price levels. So basically, I can take everything out now and I can show you what I have on EURUSD for the 4-hour time frame. This shouldn't be taking much time. Okay, so look at this. Expecting a bit of sell into this price range, then we have the bullish momentum into this price range. Then this retracement may not be up to this, may not be more. Okay, may not be up to this, but I think something like this sounds good or looks good for our anticipation in the market. So basically, this is what I'm expecting on EURUSD monthly time frame. So basically, this is it. All right, so let's keep that very simple. This is what I'm expecting on EURUSD 4-hour time frame for this week. So into the next month, we'll still be experiencing more buy in this market. And let's go to the other currency pair, so we keep it very, very simple. Great Britain pounds US dollar for the monthly time frame. What do we have with that? We have a bullish momentum too. The month of March was a bullish momentum for Great Britain pounds US dollar, which the market did about 400 plus in pips, and it's retraced a little because we came to the end of the month, and definitely this is also expected. So are we still expecting more bullish momentum? Yes, of course, to this price level at a point in time. We're expecting the price to get to this level, which is 1.3429 or 1.3450, 1.3430 rather, 1.3430. So actually, this is what I'm expecting from this market. This is where I'm expecting it to get to at the end of the day. And currently, to where the current market price is now, if you check that, you're going to see this is about 500 pips to the top side. So now let's deal with what we have currently. This remains a bullish momentum on the higher time frame, like a monthly time frame, though we're going to experience a little bit of bearish momentum, as the case may be, on a lower time frame. The previous week, like 4 weeks ago, we had a very massive bullish momentum which created this kind of momentum in the market, and since then we're waiting for the market to do a bit of retracement into the weekly fair value gap before we have a bullish momentum, just like we saw on EURUSD. EURUSD actually did it. It did a little bit of retracement into the other block zone, into the fair value gap zone, before it printed a bit of buy signal. But right here on the Great Britain pounds US dollar is not doing anything of such. And currently we had 3 weeks back to back that has been choppy in the market, and the market refused, the price refused to move back into the fair value gap. So with that now, it's creating more bullish momentum. And ideally, if I'll be going with the analysis on this weekly time frame, I would be expecting a bit of this sell into this fair value gap zone. And when you look at that, it's about how many pips in total? 140 pips in total. So for anything from the 100 pips, I would think from 130 pips rather, if it taps into this range, it would be more safer for me to buy. But at the end of the day, it's still a buy. Of course, it's still a buy even on the higher time frame, but I'm just trying to avoid plenty drawdown. So I'll be waiting if this will sell into this range before I buy. And if it's not selling into it, where should I buy from again in the future? So I'll go to the daily time frame like this and figure out the opportunity we had. So I'm going to take this out. I'm going to take this out as well. And I will look at what we have for the last week. Last week was very choppy in the market. As you can see, Monday, Tuesday, Wednesday, Thursday, Friday. Significantly, this is really, really choppy. Look at that. The 5 days we had was a choppy one in the market. So look at the 5 candlesticks. Very choppy, right? So this was the previous high level we had. The previous low we had was taken out, which was the low of last week. And the market closed again in that zone. So what are we left with right here? This is not looking good. It's not looking distinctive into any particular direction for us to take a buy or to take a sell. But ideally, like I said, I would be expecting a sell to make it safer for me. I would be expecting sell on Great Britain pounds US dollar for me to start buying it. So it's more safer for me to see this opportunity right here, to see something like this before I buy Great Britain pounds US dollar. So to keep this very simple, I'm going to go to a lower time frame like that of the 4-hour time frame. So let me draw this out again. So this is where I'll be expecting the price to still come to in the future, and a price level like this. All right, so let's go to the 4-hour time frame. Let's see what we have on the 4-hour time frame. Therefore, this is really choppy, really choppy. Look at this. We had a series of candlesticks right here. Everything we have here, look at this here. All right. And the next thing we had was something like that, still similar to it. So basically, we just had a series of candlesticks formation, upper wick and lower wicks, just forming left and right and center of the chart. And this is not looking good for me. So basically, I'm not going to consider this. Euro US dollar will be a better option for me for this week. And when you look at this carefully, it's not looking too clean. The only place we have a buy moment, a buy opportunity where liquidity could be residing is at this price level. This is a 4-hour time frame fair value gap zone, and from there to where the current market price is, let me calculate how many pips we have there. So with what we have, we can determine if the market will likely come back. This 45 pips. Well, this looks much easier and believable that the market can actually come into this price range this way, and from there we can have our buying momentum. So basically, it's very possible. This is 4-hour time frame. This is what I'll be expecting on Great Britain pounds US dollar. Of course, it market might open and start buying. Okay, it is very certain that the market might open and start buying. In fact, market might open with a gap down into this price range and start buying from here. So basically, this is just what I'm saying. I would be waiting to buy from this price zone. Basically, this is what I'm saying. All right. So to keep it simple, this is what I have on Great Britain pounds US dollar for the 4-hour time frame. And let's go straight to the Australian dollar. What do we have on Australian dollar? Looking at the chart right here, this has been a choppy market too for the past 3 months, and it has gone into the fair value gap of the 2 months ago of January, and month of February actually almost wiped the entire fair value gap zone and retraced into the discount price level. And the month of March actually started again with that bullish momentum, which was a bit of choppy movement. And currently, this is not leaving us with very good impression of where the market is heading. It's looking bullish, but then let's go to a lower time frame to see further opportunities and clarity, right? On the weekly time frame, look at this. Right here, it's more or less like the market is building up momentum. Something is building up right here. That's one thing that is certain. The market is building up something right here. So everything we've seen from this level, and we had this series of bearish momentum, liquidity pool, and then market started retracing, creating series of higher highs and higher lows within this channel, liquidity channel. I would be expecting that at the end of the day, we still have more buy into this zone, Okay, so this will make this looks good because we have Great Britain pounds US dollar to be buying at the end of the day, Euro US dollar to be buying at the end of the day, and AUD US dollar should not be exempted. And even with the correlation of the currency of this currency pairs, it still looks really good. But I will be more careful on AUD US dollar based on what it is showing right now. So let's go to the daily time frame on AUD USD. Let's see what we have on daily time frame. So on the daily time frame, we're not really having much of fantastic setup on the daily because all of the days in last week actually formed more or less like a choppy market. It was actually a ranging market. So looking at that from this perspective, we had 4 to 5 days that the market was just actually ranging within a price zone, within this price range to this price range, which is not really good. And then what exactly are we looking at for this week? Are we expecting this level to be taken out as it is? Basically, this shows a level of buying and selling failure swing, the previous low close, and then acting as if this will be a bearish momentum. But however, whatever this turns out to be, going to be of a bullish bias, but I would be expecting this level to be taken out. If at all AUD is going to sell, I'm going to be expecting this level to be taken out on AUD USD, something like this to happen before I look for a buy momentum. So basically, this is the outlook I have on AUD US dollar daily time frame. So let's see what we have for the 4-hour time frame. I'm going to take out this guy. Okay, let me leave the other one. So looking at this from this perspective, therefore, looking at this now on the 4-hour time frame, we've seen that this is actually choppy, and then the market created something that is spectacular within this price range, lower lows and lower highs per se, and at the same time it's creating higher lows, right? This is also a formation in the market. This is also a formation in the market. With this, what exactly are we expecting from this market? Is it looking bearish? Yes, actually, it's looking bearish on a lower time frame. More or less like expecting the market to break through this level, and boom, to this side. So this is what it's looking like. And this is also a potential head and shoulder pattern on the 4-hour time frame. So I'll just be careful with AUD US dollar as well for this week. So let's go to the next one, which is I think we can use USDJPY. So USDJPY on the monthly time frame, let's see what it has to do. Let's see what we have there. USDJPY on the monthly time frame, this looks good a little because right here we had a little bit of bullish momentum where opportunity lies or where volatility lies for the month to come. This is a fair value gap on the monthly time frame, and when you look at that, it gives us a significant level of confidence that we can expect the market to move into this price level and do something like this in the future. But let's further break this down in the lower time frame and see if this opportunity is really looking nice for every traders. All right, on the lower time frame, which is the weekly right here, this is what we had on the monthly, and for weekly, look at this very well. Let's see if we have any bullish opportunity here, if we have any momentum, if we have any liquidity side, and let's just see what we have. Okay, so basically from this price level to within this price level, we had a series of movements, right? We had weeks of candlesticks. We had the level that has been tested already right here. So this is also showing more bearish momentum with this candle. This is a shooting star candle at this area, at this formation. So basically, I would be expecting more bearish momentum on that USDJPY on the weekly time frame because this is what it's showing right now. Forex market is about it's about what we see. So we deal less with what we think, we follow what we see. That's where the money is, all right? So on the weekly time frame, it's showing more bearish momentum. So the question is, how far will this sell before we had a bullish momentum? How far will it sell before we have a bullish momentum? So basically, I'm going to expect a little bit of sell on this weekly time frame before we have another bullish momentum running. And of course, when you look at where we started this buy from, it's also a weekly fair value gap zone, which liquidity was trapped before now, which was here. If you look at, if you're seeing this, can you see from this level to this level, liquidity was trapped in here, fair value gap, the market raided it and then pushed to the upside. So this level now has now become a supply zone for us, and we're expecting the market to react. Now this is the reaction showing a shooting star for the closing of last week. So what are we expecting? I would be expecting more bearish momentum into the market like that. Okay, but let's go to a lower time frame so that we are not blinded with the higher time frame bias. Okay, on the lower time frame, look at what we have. The daily time frame showed us that we have a fantastic massive bearish candle for closing of the last week, which was Friday, and that closed for almost, it closed what the Tuesday, the Wednesday and Thursday price has done. Markets engulfed the entire 3 previous days, right? So with this now, it's telling us we should be expecting more bearish momentum for this week on this particular currency pair. So with this play out, a little bit of buy into this range, then we can expect the sell to move into that range. Basically, this is what I'll be expecting on this particular time frame. Okay, so this is USDJPY on the daily time frame. Therefore, we'll be expecting the market to play out this way. If the market is not giving so much confirmation, I will leave it. Okay, I'm going to leave it. So right here is just the first take profit level, and of course we have another level right here which is below, which liquidity is also residing, which is about let me see, I'm coming. I want to calculate that. Looking at the market from where the market is to the current market price, that is about 470 pips, which is very, very achievable for what USDJPY can do in a week. All right, so that is on the daily time frame outlook. On the 4 hours, what do we have? On the 4 hours, we have series of candlesticks for last week that created that bearish momentum, leaving us with significant level to anticipate the market retracement. So where would the retracement be? By the way, we have a liquidity level above the current market price or the closing market price for last week, which is right here. So if you ask me, I'm going to expect the market to come here, which is at 150.30 or 319 or 32. Anyhow you want to round that up, but within this price level, I'm expecting the price to come back there on USDJPY 4 hour time frame, then to grab liquidity from this level. Then we see more sell potential opportunity for this week. And that is the outlook on the USDJPY. Overall, we're waiting for this short-term sell on the weekly time frame, daily time frame, and of course a little bit of buy on the 4 hours before we see more sell on the same 4 hour time frame. So let's go to the last currency of the day. Let's see what gold is doing. Of course, my bias on gold has always been a buy since last year. And when you remember what I talked about last week, I said there is likelihood for gold to break its own record for that last week, and it happened. Look at where I marked for it, where it was before, and look at what gold did extra. It did about 200-300 pips extra just to break the record that it has set for itself. So going back and forth is not necessary. Gold is still on the bullish momentum. It's still on a bullish bias. For me, I will stick to the bullish momentum for gold for this week. What gold has created for this month is about 2,000 pips or 2,700 pips on average for this month alone, and this has been a massive momentum. When we look at where we can find a buy opportunity, is just right here. The price is very far. That is when gold was 2,840.10. This is looking like impossible for the market to come back here because the massive momentum we had was kind of too much, and then gold has not done any significant retracement of such in a very long time, and having the all-time high at 308.84 where it closed for last week, it is also important for us to go to a lower time frame to see if there would be a necessary retracement zone where we can anticipate gold retracement for this week. I will be looking at a price level like this. Of course, this is about how many pips in total? About 1,200 pips, so to say. 1,250 pips, so to say. I'm not sure gold can do that for this week. I'm not sure that retracement level will happen to facilitate such deep retracement for this week. And when you look at what happened in the previous week, the 2 weeks ago and the last week, you will see that this is a balanced price range. Of course, so the only place we have, the closest level we have a buy opportunity if gold is going to retrace is at this price level between 2932.89 and 2983.49, and the threshold is 2956.24 or 2957.54. So basically, if you look at that now, it means we have just one option if you want to steam milk from this gold. It's either, if you're a long-term trader, to click and to leave it on a buy direction with the massive momentum is still valid until when there is external force, be it fundamental or whatsoever, that counters that momentum. Otherwise, if we are waiting for this to sell down before we are going to buy, well, this is where I'll be anticipating it to sell to, which is 1,204 pips, 1,240 pips, which is kind of much. So I'm not really expecting that on weekly time frame, to be honest. And let's see what this could be on a daily time frame. Let's see if we have a better opportunity on daily time frame. On daily time frame, yes, we did add a better opportunity because on a previous day, one of those days, we had a previous high, which was 3,057, which was the price level of gold at a point in time, which was taken out completely in the market. And the candlestick that actually anchored for that to be broken, and where the current market price is for the closing day of last week Friday, is actually leaving a fair value gap zone behind, which is at 3033.12 and 3056.24. And if we go by that threshold, 3045.45, 3045.09. So that's 3045.09 will be the price which I would be expecting to see retracement of gold before I can see it buy again, and of course break its own record again. But let's go to a lower time frame. Let's go to 4-hour time frame. Let's see how that looks like on the 4 hours. Let's see if we have early opportunity. So I'm going to take out this, I'm going to take out that. So on the 4-hour time frame, the opportunity remains the same. You can only refine it a little bit to the upside, which looks better right here. Okay, right here, the market has tapped into it though. The market has tapped into the level we are looking at. So basically, this is already mitigated in the market, which would have been 3064.00 zone. So let's go to 15 for 5 minutes. Okay, let's see for 5 minutes if that can help us to find at least a level where we can anticipate an outlook. So basically, all of these price levels here is actually balanced price range, meaning there is nowhere we can see a potential buy opportunity in the market. So we just have to wait for market to open on the Sunday night, let it play out on Monday, and we can have more insight on which direction gold might likely go to next. All right, so for me right here, we still be going with the bullish momentum on gold, but there is no specific and significant price level where we can anticipate buy momentum from, apart from where I have seen, which I have shown. Otherwise, I will remain very, very focused on the bullish momentum on gold. Ladies and gentlemen, thank you very much. This is what I have to show you for this week. Trade with proper risk management, and do have a wonderful week ahead of you. Bye for now.